Most people believe that the path to financial success is all about picking the right stocks or having insider information. But here's a shocking truth: over 90% of individual investors fail to beat the market over the long term. Why? Because they're not training their brains to make smarter decisions. If you've ever wondered why some investors seem to always be ahead, it's not just luck. They've learned to think differently. They've trained their minds to focus on the bigger picture, avoid emotional traps, and make decisions based on facts, not feelings. In this video, you'll discover the secret to mastering the mindset that turns ordinary people into successful investors. We'll dive into how to stay calm in market chaos, build habits that help you reach your goals automatically, and use simple strategies to grow your wealth without constant stress. By the end, you'll know exactly how to start training your brain for financial success, whether you're new to investing or already have a portfolio. Stay with me, because the mindset shift we're about to discuss could change the way you approach investing forever. Chapter 1. Mind over Money. The psychology of value investing. When you think about value investing, the first name that comes to mind is often Warren Buffett. But did you know that much of his success comes from his ability to control his emotions and mindset? The psychology of investing is all about how your brain reacts to market fluctuations, the pressure to follow trends, and the temptation to time the market. The key to value investing is a long-term mindset. Studies have shown that successful investors hold onto their investments for an average of 5 to 10 years. This doesn't happen by accident, it's the result of training your brain to be patient and disciplined. The more you focus on the fundamentals, such as price-to-earnings ratios and company growth potential, the more naturally you'll make decisions based on logic rather than emotion. According to a 2020 report by Morningstar, investors who stuck to long-term value strategies saw their portfolios outperform those that chased short-term trends. Your brain needs to embrace this concept. Patience truly pays off. Chapter 2. The Set and Forget Strategy. Automate your investment choices. One of the most powerful tools you can use in value investing is the Set and Forget strategy. This strategy means setting up automatic investment rules based on predetermined criteria, like a specific stock's valuation or its earnings report, and then sticking to those rules, regardless of market noise. In the world of value investing, we are often overwhelmed by daily stock market news, chatter, and endless predictions. This emotional noise can make us stray from our strategy. However, if you build automatic systems into your investment routine, like dollar-cost averaging or investing in index funds, your brain doesn't need to make decisions every time you feel uncertain. Data shows that over 85% of successful investors use automated investing tools, allowing them to avoid impulsive, emotionally driven decisions. By doing so, you eliminate the mental stress of market volatility, making it easier to stay focused on long-term growth. Chapter 3. Rewiring your brain for patience. The secret to long-term growth. When it comes to value investing, one of the hardest things to master is patience. Markets go up and down, and the temptation to sell during a dip or jump on a hot stock is constant. But, as Buffett once said, the stock market is a device for transferring money from the impatient to the patient. Psychological studies on investors reveal that impatience often leads to poor decision-making. A study by the Journal of Behavioral Finance found that investors who lacked patience were more likely to make decisions based on fear or greed. To truly succeed in value investing, you need to rewire your brain to be comfortable with the long wait. Building habits of patience, such as setting long-term goals and reviewing your investment strategy at regular intervals, can train your brain to resist the temptation of quick wins. A Harvard Business Review article noted that having a clear, written investment plan increased long-term success by 30%. So take the time to write down your goals and stick with them. If you're enjoying this content, make sure to subscribe to the channel for more tips on mastering the investing mindset. We're diving deeper into strategies that can help you grow your wealth. Chapter 4. The Cognitive Bias Buster. Overcoming emotional traps in investing. We all have biases, mental shortcuts that influence our decisions. In investing, these biases can lead to costly mistakes. Cognitive biases like confirmation bias, seeking out information that supports our beliefs, and loss aversion, fearing loss more than valuing gains, can cloud our judgment and prevent us from making sound decisions. A 2019 study by the CFA Institute found that 75% of individual investors succumb to biases that hurt their returns. The key to overcoming these biases is to recognize them and train your brain to think critically before acting. For example, instead of reacting to market news, ask yourself whether the information aligns with your long-term strategy or whether it's just noise. You can train your brain to be less susceptible to bias by using tools like a decision journal. Write down why you're making a specific investment and revisit it after a few months. This helps reinforce a disciplined thought process, helping you stick to the fundamentals. Chapter 5. The Power of Mental Models. In value investing, the most successful value investors use a concept called mental models, frameworks for thinking about problems. These models simplify complex decision-making processes, allowing you to make smarter investments with less mental effort. For instance, using the circle of competence model, you only invest in industries or companies you truly understand. Charlie Munger, Warren Buffett's partner, is a huge advocate of mental models. He believes that having a broad set of mental tools allows investors to make sound decisions. He's quoted as saying, "To the man with a hammer, every problem looks like a nail." To avoid this, build a collection of mental models that help you evaluate stocks from different perspectives: value, growth, competition, and market trends. Studies by the National Bureau of Economic Research suggest that people who use mental models are 40% more likely to make rational decisions in complex situations. So, create a mental toolbox that helps you filter out irrelevant information and focus on what truly matters for your long-term success. Chapter 6. Goal Mapping for Investors. Visualize your financial success. Finally, one of the most effective ways to train your brain to automatically reach your goals is through visualization. Visualization is a powerful tool used by top athletes and successful investors alike. When you clearly visualize your goals, you activate the areas of your brain that help with decision-making and motivation. A study published in the Journal of Sports Psychology found that athletes who visualized their success were 20% more likely to achieve their goals. Investors can apply the same principle by visualizing their investment portfolio's growth over time. Whether it's reaching a financial milestone or achieving a specific return on investment, the more vividly you see your success, the more your brain will work toward it. Start by writing down your investment goals and break them down into smaller, actionable steps. Then, take a few minutes each day to visualize achieving them. Imagine the feeling of financial freedom that comes with a well-executed value investing strategy. If you haven't already, be sure to subscribe to the channel. We're committed to helping you create the mindset that leads to real investment success. Keep visualizing your goals and take the next step in transforming your financial future. Conclusion: by incorporating these strategies into your daily routine, you can train your brain to automatically reach your investment goals. Value investing isn't just about picking stocks, it's about creating the right mental habits that lead to success. With patience, discipline, and a well-thought-out strategy, you can transform your financial future. As you build your value investing mindset, remember, success is the sum of small efforts, repeated day in and day out. Robert Collier. Stay committed to training your brain, and watch as your financial goals unfold naturally over time.